Hello everyone, welcome back. In this video, we're gonna talk about what to do when price doesn't come to our entry. Now, this issue may happen a lot frequently on certain scenario, or don't happen if let's say you're a quite aggressive trader. Now, on my way of trading, as you know guys, I mainly took high probable setup, so I'm not way too much into, let's say, going for very aggressive trade or low probable trades. I just wait for high probable one, and if they happen, I execute. And if they just don't happen, I just wait till the next one. So I want you all to focus on this analysis I marked up a couple days ago. Now, as you can see, we have a strong high, run on liquidity, break a structure. So that will be simply our strong high right here. And then we have our strong low price takes out the liquidity. And yes, now remember, the way that we trade is just to expect the internal insecurity to be taken. And then after we take out the internal, we go to target the external, right? So that's basically what a high probable setup is. Now you can either wait and get, let's say, some counter trends. For example, you can anticipate a short right here getting into this long, but for me that's not too high probable. We're gonna cover this when we're gonna talk about ping pong, but in the overall, these are not the high probable setup I will focus on mostly, right? So to me, as I said into multiple videos, a high probable setup is just price taking out the whole internal insecurity that we see into a range, come to a very nice premium or discount area just above it, and then execute and target the external. Now, there are reasons the price may react either into the trap that we're anticipating, basically the internal insecurity. There can be also a situation that price may react onto random areas and just drop and keep dropping forever, right? Sometimes price do this, right? You need to be aware of this. This is not on you if this happens. What's on us is just applying the strategy in the most correct way. So once you have marked up your range, you can just wait for the internal to get taken and then target the external, right? That's basically our cycle, the way that we trade. So you cannot control price. You cannot understand if price is going to just drop right here or just come to your entry and give us our high probable setup, right? We can control the price. That's not on us. The only thing that we can do is to place our trade in a logical area that makes sense for the way that we trade. Now, you may look aggressive or conservative setup. This doesn't count. This will happen frequently. You can miss setup even if you're kind of aggressive traders, right? That happens too. So, since we can only control the way that we trade, we should only focus on going to get always that textbook setup. Right? Don't think textbook about the way that it appear, right? It has to be textbook for the logic you put behind. So whenever you put a range, and that can be either a T1 or let's say just a T2, right? This has to be textbook. It's not gonna look like exactly like this, but you have to put your mind and just use this formula to translate every single scenario you came across and refine it onto something that will look just like this, right? So following this example, I had this internal insecurity marked up. Obviously, this came across not only the time frame. You see, I'm not just gonna go through the whole breakdown. The important thing is the logic we put behind. We had this target. After price will came to this internal, I expect this high time frame PI to play it out. Obviously, I had my entry right here and my stop loss just above it to target the external. That was a nice 105, right? That's what I saw. We have everything lined up. I came across multiple time frames to have all of these So I'm 100% sure after I have both of my QM marked up, the price is gonna come right here. Obviously, if I'm trying to ping pong, I can just take trades. Let's say, for example, right here we have a BOS. That's a three candle formation, so that basically onto a lower time frame is just going to be a QM, right? It's just going to be a weak high, right? Since we're going up higher. So I can just look, let's say for my simple trade, I have a low, price makes a high, retrace, break structure. That's T1. So we can just, let's say, execute if we are counter trending on this unmitigated wick, closest pair to the liquidity, and get this high at least, right? That will be our safe target. If you're counter trending, you should always exit to the external range liquidity. Now, sometimes this target, especially if you're counter trending, is not gonna be like always I want a 4 or I want a 5, right? If you, let's say, take only this unmitigated wick, this will be more than enough. It's going to be like I want a 7, I want a 8, and I will just personally execute here, right? But let's say you take this whole block right here, will look like something I want a 3. Now, you can take it, but let's say if your average risk redeem is about to be a 105, you will exit to the external range liquidity. Or even, let's say you are confident or your analysis, you're gonna exit right here just because it makes sense following your own perspective. So why you should not trust it, right? Now remember, you should always exit right here because maybe price will just came up, react onto random areas, and then drop. To have high chances to don't get stopped out of break even, you should always exit to the external insecurity. Now, obviously, if I find myself into this situation, I will hold the trade till here. Makes no sense to me to exit here. But I'm aware of this price action can happen. That's a possibility. So that's an actual chance that this scenario will play out, right? At the end of the day, trading is just a business. It's just a matter of risk and how do you trust and how effectually this will happen, right? It's just this. Anything will happen 100% of the time. So just take the risk or don't take it. That's on you. You have to take decisions whenever you do. There is no other way, right? So if you're planning to exit right here and get the short, planning this textbook ping pong, you will get stepped out of break even, and eventually you're gonna get this break even out, and obviously you're gonna miss also this trade. But what did you do wrong inside the fear? Nothing. That's not on you, right? Because for you, it makes no sense to, let's say, take a trade to this whole block right here. It makes no sense because following your analysis, that's basically a trap. And that's basically internal range liquidity. Is here to trap early sellers that has the stop loss trail just above it. And you want to enter when all of the trader has their stop losses, right? Following our high time frame range. That's the way to be trader. You cannot, let's say, find a way to just take this trade, right? Because if you say, oh, I will take this trade because that's no internal insecurity, you should also enter, let's say, for example, right here onto, let's say, this unmitigated wick. Why you don't want to enter right here? Because it didn't play out. But that's the same thing, that's internal insecurity. Why you wouldn't enter here? It makes no sense. It's just for your mind that you see these two areas in a completely different perspective, but they all look the same. They're both traps. They're both internal insecurity, right? At least maybe this area should give, for example, let's say a pullback come here, but it didn't. Not because this area is wrong. Now, price obviously had his reason to push down lower and take out the external insecurity. But for the ways that we trade and the way that we see, we should wait for this area to play it out. That would make sense, and that's not on you, right? Now you see that something should just click into your mind because you always saw these two areas on a completely different perspective because one played out and one did not. There can be multiple factors. We are not covering obstacles. These two areas will be only areas to look for short. But it's if you're looking for an obstacle, right here you have equal highs feeding into something unmitigated inside of here. That makes sense to play it out. But again, if this played out, will you consider now as the obstacle or the whole PI? You're not confident or you don't, let's say, trade where you're supposed to if you say that if those play out will be the PI. That's an obstacle because our internal is here. Take decision. Don't, let's say, think about always where price reacting from. Sometimes price will just react following the traps, right? Not always, but let's say 1 or 2% of the time, it will. So are you aware, let's say, of spending times and going to analyze those data that doesn't even make sense at the way that you trade? Of course not, but you have to be disciplined. You have to actually be aware of scenarios like this can happen and they are normal. So take a breath. That's not on you. There is anything 100% of the market. This strategy has a 90%, 85, 75, anything below this, if you master it, will rate you. So at least let's say 75 will rate you. You should be able to get it if you master it. You can move up to 90% if you only look to the highest probable setup. But that will be on you. Obviously, if you're more aggressive, your win ratio can be something like 60% or even 50%. Will depend on the way that you trade, right? On my perspective, since I'm kind of conservative, that doesn't mean I take only a trade. I also do ping pongs in my session. I have a floating 75, 80%, right? But this will just depend on you and the way that you trade. So price miss this area. How we can be aware the price is going, let's say, to take out the whole external insecurity and is not gonna come right here. Now you have to think in structural terms, right? You have a bullish breaker structure. That's a strong low because take out the liquidity, completing his range cycle and broke structure, right? So that's a protected low in this little bullish market structure, right? So price broke structure again after getting another range cycle. Take out all of these equal lows, feeding into this unmitigated wick, and the broke structure again. So if we are bullish, this low should hold. There is no reason that this low will get taken. Also has internal range liquidity being built in, right? So there is no sense and no point the price will take this low if price want to come up here, right? But eventually, price will take out the low. Now remember, we are on a bullish market structure and all of the lows must be protected. When one protected low get broken, what will happen is just the structure will shift to bullish to bearish, retracement to expansion, and vice versa, and internal range liquidity to external range liquidity, right? Not all the ranges will just take out the whole internal range liquidity, right? So whenever you have this breaker structure, you can just look to take short setup. So now you will have a new range from this high to this low, right? You will have equal highs being built here, and you can just take your PI, and that will be your first short. You can target this low, but eventually your target is going to be right here because what makes sense following your high time frame analysis, following your red range right here. Then we had a breaker structure following this orange range right here, right? So now we will have a new range, this purple one. Now again, which pattern do we have inside? We have a high, broke structure, retrace, broke structure once again. That is the one. right here. So what do we get? Expect is just this high, that is a trap to get taken, right? That's what I saw. That's high probable to me. Now I'm aware if price is reacting for somewhere right here, it's not gonna come with high probabilities up here. Also because inside we will have a lower time frame range that will be from this high to this low right here. And inside we will have a T1. Now, what would you risk to take a trade right here? Do you see this as something high probable or you don't see this? On my perspective, on the way I will trade, I just took this block right here. It makes me feel confident. I'm aware the price may not come, but it's not because, let's say, this area is wrong and this area is right. Will depend on you, will depend onto your edge, right? There are a lot of factors that can happen and will determine your chances to get tapped in or not, right? By the end of the day, just take your trading plan, follow your rules. My trade is not going to be the same exact as yours and vice versa, but it's not because one of us is trading wrong. We have two different ways to see the market. Not I mean to see the whole market onto the overall perspective, but just the way that we'll look for a trade, right? You have to find your way that will suit you, right? And be confident with it and execute over and over. Price comes to your entry, you just execute because you feel confident. You miss, there is anything wrong with it. That's just your edge. You see the same trade I catch it right here. It's the same I wanted to catch onto this example, right? If I only look into high probable setup, this will happen, right? But obviously, it's not like always like this. Sometimes I will just hit three of them, and sometimes I will either miss all of three of them. Right? Will depend on a lot of factors. That's just a general example that you need to be aware. So focus on the logic that is behind. You'll master this, what I'm saying into this video. You're gonna be able to apply and master it on every single chart scenarios you're gonna come across, right? So you'll need to find your way to trade. I recommend you mine because it's going to build you a lot of knowledge and confidence, right? So follow high probable setups. You need only of them, and once you master them, you can just go and catch even these trades. But before, you should build a solid base. That's what we do in the mentorship program, right? So take your trading plan and take the decision. If price comes, you execute. If it doesn't, go to the next example, go to the next scenario, go to the next trade, but take decisions. You have always to take decisions. That's the only way you're going to be able to build confidence, right? For your mind, all of these trades will look different, right? The one with the tick is going to look better than the one with the X. But in reality, they are all the same trade. I just waited for the whole internal range equity to get taken and execute. By your mind, we'll see all of them in a different perspective, right? Now that thing should be clicking into your mind. If it's not, just rewatch the whole video and get to the point, right? Because you master this, you're gonna master easily, let's say 70, 80% of the whole psychology in trading, right? So make sure to rewatch it at least another time until this thing click. Be able to see them in the same exact way. They're all the same trade. It doesn't matter if one played out and the one you miss it, or either let's say this one will stop me out. If I have, let's say, a tight stop loss, let's say take something just like this. That will be the same trades. These are only different outputs. How can I determine which one will be mine? You cannot. You can just take decisions and build your own edge, right? That's the main key, right? So for this video is all. I hope something will click into your mind after it. And if it's not, make sure to rewatch. This is a core fundamental, right? So hope you'll find it helpful. See you to the next one.